Hello friends and welcome to Coin Mühendisi Global. The 10th video of our Introduction to Technical Analysis series is the Stochastic RSI Indicator and how to use it. But before we start, I would like to say that you can have all the crypto information you need for free from our YouTube channel. So do not forget to subscribe and keep the notifications on for our upcoming videos. The Stochastic RSI or Stoch RSI is an indicator used in technical analysis that ranges between 0 and 1 and is created by applying the stochastic oscillator formula to a set of relative strength index or shortly RSI values rather than to standard price data. Using RSI values within the stochastic formula gives traders an idea of whether the current RSI value is overbought or oversold. You can add the stochastic RSI indicator from the indicators folder by typing it on the search box. The Stoch RSI is based on RSI readings and the RSI has a default input value 14, which tells the indicator how many periods of data it is using in its calculation. These RSI levels are then used in the Stoch RSI formula. The Stoch RSI oscillator was developed to take advantage of both momentum indicators to create a more sensitive indicator that is attuned to a specific asset's historical performance rather than a generalized analysis of price change. While the relative strength index was designed to measure the speed of price movements, the stochastic oscillator formula works best when the market is trading in consistent ranges. So generally speaking, RSI is more useful in trending markets and stochastics are more useful in sideways markets. Although the Stoch RSI and RSI utilize the same reversion concept, the latter relies on a different formula to compute RSI values. RSI derives its values from price, unlike Stoch RSI, which derives its values from itself. One key feature that sets the two technical indicators apart is how fast they move. Stoch RSI's movement is more rapid from overbought to oversold than that of RSI. Other than identifying trading opportunities, the Stoch RSI can predict short-term trends. Traders define price reversals and price turns using an oscillator that moves with a defined range within center line of 0.5. Generally, the assets are trading higher when the Stoch RSI readings exceeds 0.5 during a trading range. However, a value below 0.5 means that assets are trading lower. The stochastic RSI can also be used alongside with other technical indicators to provide price divergence signals and enhance effectiveness. Divergence offers insightful clues regarding the movement of the near future momentum. The most common use of Stoch RSI in the creation of trade strategy is to look for readings in overbought and oversold ranges. The Stoch RSI fluctuates between 0 and 1, with readings below 0.2 considered oversold and those above 0.8 reflecting overbought conditions. But overbought doesn't necessarily mean the price will reverse lower, just like oversold doesn't mean the price will reverse higher. Rather, the overbought and oversold conditions simply alert traders that the RSI is near the extremes of its recent readings. A reading of 0 means the RSI is at its lowest level in the 14 periods. A reading of 1 means the RSI is at the highest level in the last 14 periods. And other Stoch RSI values show where the RSI is relative to a high or low. That is it for today. I hope you have enjoyed our content. If you did, please drop a like under the video. And if you would like to see more of our content, please click on the subscribe button. Thank you for watching and take care. Until next time.